President Trump is now taking questions during his meeting with Texas Governor Abbott. The president says that he's very happy for former National Security Advisor Michael Flynn after the Justice Department is dropping his criminal case. Plus, the president says that the next year will be a phenomenal year, and we have the greatest economy in history. We're going to bring you more headlines from the White House as soon as we have them. Meantime, we're watching stocks very closely, rallying into the close, the final hour of trade. Investors are going to hear from a slew of companies this afternoon reporting after the bell. Let's bring in Point of View Wealth Management President and Chief Investment Strategist David Dietze and Walser Wealth Management President Rebecca Walser. Great to see you both. David, let's start with you. Two-thirds of the S&P 500 have reported earnings, and whether it's expected or not expected, it still hurts to see them down more than 12% quarter on quarter. And that's not even taking into account that the worst of the coronavirus happened in April. Your thoughts on where companies are going to have to go from here?
Yeah, absolutely. This is the big juxtaposition because we've seen a tremendous rally off the March 23rd lows, as much as 30%. The NASDAQ may well finish the session up today slightly, first time since early March. Yet at the same time, as you just pointed out, Q1 earnings are really a disaster. In fact, it's not just that they're double-digit down year over year, but the percentage of beats off of very beaten down expectations is the lowest since the subprime crisis. And as you point out, Q2 is only going to get worse. I think there's just a couple ways to reconcile it. One is it's going to be a very deep sell-off, but investors are already looking to 2021 when there should be a 28% rebound. And of course, the other thing that investors are expecting, I think, is continued substantial help from the Federal Reserve and more stimulus from Congress.
Yeah, low interest rates definitely help, Rebecca. It's sort of just keeping that punch bowl spiked. But at the same time, we're looking at a lot of the companies that are reporting. And yes, you have companies like Amazon who didn't even missed earnings as a result, even though they're seeing better business during this coronavirus pandemic, but they have higher costs, for example. But you're seeing some companies benefit and others are getting hit hard. This isn't like the financial crisis where the banks were impacted. Every sector is getting hurt here.
Yeah, Jackie, this is just an overall economic shutdown. And, people talk about Q1, and I agree with your point at the very beginning of the segment, where we were actually +2 on GDP going into the second week of March. And so to come out with a 4.8 negative swing, that's really a 6.8 negative swing in a 2-week period. But that is what we should expect, Jackie, when we shut down voluntarily the entire economy with the exception of essential services. So, yes, there are some outlying companies like an Amazon that has, online delivery or demand, and Netflix and these kinds of things. Some of the cloud computing obviously done well. But if you look at Amazon, obviously the overhead expenses of shipping went up, and they actually took on a lot of investment to actually make that happen faster. So that's going to offset numbers. But this is what we get when we shut down our economy, and we have to reopen in order to actually start to see a better Q3 and a Q4.
All right, guys, I'm going to have to leave it there. Thank you so much. We'll obviously be watching these earnings after the bell. We're going to hear from Uber, and it was difficult for Lyft, so it's something certainly to watch. But we are watching the Dow as well, 23,916. The Dow is up 252 points. It's well off of its session highs, but still holding on in the green. And we're going to be watching the NASDAQ very closely in the final hour of trade. Liz Klayman, that hour is yours.